Talk about negative interest rates. Do you think that this trend is going to continue globally, where the bankers who you think most bankers are idiots, and right? But I actually think that what else can they do? I believe we're going to go lower and longer.
Well, I mean, what they can do is the right thing. But what they will do, it's like asking me, how much longer is a drug addict going to take drugs? I mean, until he can't do it anymore, until he's, hung over and he's, barfing in a toilet enough and his wife's left him and, he runs out of options. But yeah, I mean, the central bankers are going to continue to pursue this policy as long as they can do it without some type of a crisis that intervenes. But the problem is, the longer they do it, the worse it's going to be. And then the scarier it is to actually do the right thing and quit the habit. But I don't think that it can go on that much longer. I mean, decades, no way. I mean, can it go on for more years? Sure.
But Trump is
I don't know how many.
But it's an election year, so it's all about the economy. Trump is going to do everything he can to stimulate and keep the markets going. So,
well, I mean,
do you see the big equity, the U.S. equities, having a severe? Is 2020 the year where?
Look, the U.S. market, has never been this overvalued, overpriced, as far as I'm concerned. People were optimistic in 2000, and I mentioned earlier, one of the warning signs is that we did blow up the private equity market. A lot of these companies, like the WeWorks and all these unicorns, they're dead now, and that money is dried up, and that is thisbubbles.com. And the dot-com bubble popped a little bit before the NASDAQ bubble in 2000. So, look, the market is very, very dangerous. It can easily go down. I mean, Trump will tweet as much as he can to try to prop it up. But whether that and the Fed's printing press is going to be enough, we'll see.
Brent, I want to get your opinion on this. I think the big potential risk, the unicorns are already a risk. I think that it's kind of unwinding. It's the actual credit markets. So you look at the triple Bs, how much debt there is that, should it be triple B or is it junk, right? You look at companies like GE and the rates and what truly should it be financed, and their debt at. What's your take?
My take is that the world is awash in debt. There's way too much of it. The U.S. has totally leveraged their entire economy. But the problem is the rest of the world did the exact same thing, and they did it in a currency that's not their own, which is the U.S. dollar. They owe $13 trillion in dollars. And that is demand for dollars. And the global reserve currency institutionalized effects forces people into dollars, and the U.S. Navy forces people into dollars. And despite everything that I agree with what Peter just said about the foolishness of the central bankers, those central bankers exist in Japan, they exist in Germany, they exist in England, they exist in Brazil, and they're all doing the same thing. And on a relative basis, the dollar is going to crush those currencies. Now, maybe versus gold, the gold will go up, but the dollar is going to crush the other fiats.
So should the bet be the DXY at this time next year?
What are you, a casino operator here?
Pretty much. I'm in junior mining.
But look, I mean, Brent, look at the action just recently with what happened with Iran. You did not see a big flight to the U.S. dollar. You saw a move into gold.
You didn't see the dollar move at all, so they didn't sell it either. What fiat currency did they go into?
Well, they're a little bit into the yen, but they went into gold. I mean, so
Peter, hold on. I've already said that gold, everybody should own gold. Gold's going to get a bid. Now, let's talk about the fiat currencies versus each other. Which fiat currency is going to perform the best?
Well, I don't know. I think the dollar, though, is going to do worse than the other major fiat currencies over time. Well, because I think this whole fiat system that we have is nearing the end of its life, and the fact that we're at these 0% rates or negative rates and all this stuff that's going on is the death knells of this system, which was doomed from the start. And I think we're going to remonetize gold. I think gold is going to reassert itself as the primary reserve asset, monetary asset in the world for central banks, and that threatens the dollar. The dollar and the United States is the one country that has benefited the most from this fiat system. We have created the reserve currency, and the ability to do that has enabled the U.S. economy to evolve on this trajectory where we don't save and we continue to borrow and we don't produce, but we keep consuming and we export the money we print for the goods everybody else works hard to produce. And so,
but then why are the rates in the U.S. higher than the rest of the world? Your whole thesis falls apart.
No,
there, in my opinion.
First of all, we've had higher rates than the rest of the world for a long time. Look at what rates used to be in Germany, what they used to be in Japan and Switzerland. We always had higher rates. But if you look at the real rate, I mean, our official CPI numbers, our inflation, even the way the government measures it, is higher than it is in Japan. Okay. And so if you look at the real rate, you don't have as big an advantage. But our advantage is not really there. I mean, if you try to hedge the currency risk, you're going to have a lower yield in the U.S. than you have in these other countries. But I do think that people have an unrealistic level of confidence in the U.S. dollar, in the U.S. economy, and I think that's going to change.
Let Brent rebut that.
Hold on. So I want to dispel a myth that's out there right now. And I know that a big part of being a believer in gold is to believe in the death of the dollar. But if you are bearish the dollar, that's completely fine. But you are not contrarian if you are bearish the dollar. Donald Trump thinks the dollar is going lower. The Bureau of International Settlements thinks the dollar is going lower. The IMF thinks the dollar is going lower. I can show you a slide.
Well, Trump doesn't think it's going lower. He doesn't think it's going lower. He wants it to go lower, and he thinks that's a good thing. He's wrong.
So here's a survey of 33 financial institutions. 32 of them think the dollar is going lower. Only one
but
of
they
them
probably only think
higher.
It's going a little bit lower, so they're still wrong. It's going a lot lower.
So when the dollar goes to zero, which currency goes to the moon? Which fiat currency goes to the moon?
Well, I'm not saying it's going to zero.
When it goes to 20, which currency?
You're talking about the dollar index? What's going to 20?
When either the broad trade-weighted dollar or the DXY goes to 50. Goes down 50%. Which fiat currency
Well, by
goes up?
definition, if the dollar index goes down, then all the currencies in that index will double relative to the dollar.
Okay, so when the yen goes to 50 and the euro goes to 150, what does that do to their economies?
It's not going to hurt their economies. It's going to hurt the American economy.
So why don't they raise interest rates and let the currencies appreciate?
They should.
But they're not. Why aren't they?
Because a lot of the central bankers are under the false impression that a cheap currency is good because it enables you to export to the United States. But the United States is broke and can never pay for anything that it's buying. I mean, this is an asinine system that exists right now where people think that weakness is strength.
I think
and then you export for the sake of exporting.
I think we agree.
You export to import.
I think we agree that the system is asinine. It's messed up and it's going to fail. The question is, what are the knock-on effects of the failure? I say the knock-on effects of the dollar is going higher. You say it's going lower.
Yeah, I think, look, the dollar has been going down. If you go back to
Since when has it gone down?
If you go back to 1971, when we
It's up since 1971. It's up since then.
No, look, well, in 1971, you could buy a Swiss franc for 25 cents. How much does it cost today? $1? You could buy a Deutschmark. You could buy 4 Deutschmarks to the dollar. Now, Deutschmark doesn't exist, but do the math. The dollar is way down against the mark. You could buy 360 Japanese yen for $1 in 1970.
Why is that? Why is that?
Because the dollar has lost value.
No, it's because in 1986, the dollar went through the moon and they set up the Plaza Accord to artificially weaken the dollar.
What pushed up
artificially weaken the dollar.
Volcker, we had those really high interest rates for a while, and that pushed up the dollar.
Right.
And it was unsustainable. It was going to go down anyway.
What was the point of the Plaza Accord? Why did they have it? What was the point of it?
They wanted to bring down the dollar because it was just going up every day.
Why was it going up?
It would have come down eventually anyway. But you had speculators driving it up because we had very, very high interest rates, and that was pulling money into the dollar.
All right, so let's talk about speculators. Let's talk about speculators for a second.
Look at what the dollar's done against gold. In 1970, you could buy an ounce of gold for $35. So that is a massive devaluation of the U.S. dollar.
I agree versus gold.
It's gone down against other major currencies, but all those currencies have also lost value. So it's a moving target. It's a question of relativity. But America has much more debt than these other countries, especially if you count the contingency liabilities. And we have manufacturing is a much smaller portion of our economy than with other economies. So we are completely dependent.
So 18 months from now, is the dollar index higher or lower 18 months from now?
I think it's going down.
What about?
I'll bet you a gold coin.
Let's do this. A gold coin at this conference, DXY, higher or lower from this point in 2021?
All right, I'll go double or nothing.
You're playing with house money. Why wouldn't you?
And that's a gentleman. A gentleman always lets to go double or nothing. What's that?
I said he's playing with house money. Why wouldn't he take the bet?
Well, what do you mean?
Because he doesn't want to lose his only gold coin.
I just said I would bet if you wanted me.
Okay, so we got the bet. Yes or no?
Yeah, sure.
So the DXY. So everybody on YouTube world here, the bet is at the 2021 conference, the DXY is higher than today, which is the close of, what's it today, January 20th?
What is it? It's like
I'd prefer 18 months, but I'll go 12.
Like
12 months. You're a good sport. It's okay. Okay, so now let's talk about, you've got the milkshake theory, and I think gold's going to do well and the U.S. dollar is going to do well. Because look at the reverse of the petrodollar. Do you agree with me now? Think about the impact there. And you talk about absolute basis that the U.S. dollar is the most indebted nation, but on a per GDP basis, Canada's in a way worse situation on our provincial and federal debts.
Look,
right?
I'm not, like a big Canada fan, but I do think that overall, I'm talking about the Canadian government,
Canada.
not the Canadian people.
You like us Canadian people, though.
Yeah, it's just the government. But look, I think that Canada is going to benefit from the resource boom that I think is long overdue, the precious metals boom, and I think that's going to help the Canadian economy
But we can't
overall
permit anything here.
and help the Canadian dollar. But no, I don't think any country has the type of debt that the United States does, relative to their wealth-producing components of its GDP, but especially when you look at the contingency liabilities I alluded to, when you look at all of the things that the U.S. government guarantees, everything that we're on the hook for, all of the bank accounts, all of the pensions, all the brokerage accounts, there's so much stuff that the government stands behind, right, that the government is just committed to paying with no funding whatsoever. So, I mean, it's enormous,
but
the
at
amount
least it's
of debt.
the lowest
Same
interest
thing
rates
exists
ever.
in Japan, Germany, Italy, Spain, England. It's what you're describing is global. It's not just in the United States.
I'm not saying we're the only people sinning. I just think we're the biggest sinners out there. And I think we've led the way. I think, a lot of people are emulating us. But look, the United States has a huge trade deficit. That means the rest of the world must, by definition, have a surplus with the United States.
So if we go into a recession and don't buy their goods anymore, do they keep a trade surplus?
No, they keep their goods, which is better.
And what do they buy it with?
Their own money that goes up in value against the dollar.
Where do they get the money if they're not selling
Money
anything
is
to us?
nothing. The value is the production. It's the real goods. Money just lets you divvy up what's been produced. The wealth of the nation is the productive capacity, the plant and equipment, the factories. So if you can produce it, you can consume it. The idea that whoever's got the printing press gets to consume everything is nonsense. It's whoever has the factories, whoever has the chain of production, whoever has the skilled workers.
So let me ask you this.
Unfortunately, that failed in communism.
If the rest of the world defaults on their $13 trillion, $14 trillion in U.S. debts, is that a benefit to them? Or is
They're not going to have to default. They'll be able to pay it off.
With what?
Because the dollar's going to crash. That'll be like monopoly money.
Well, okay.
But
That's what they believed 10 years ago when they took out all this debt, and it hasn't worked out for them, so we'll see.
But the opposite's happening now. If you look at places like Kazakhstan or in Russia, these
Turkey.
Argentina, these resource-producing nations, even China, we see that it's becoming more expensive for them to service the American debt, even at low interest rates. But hold on, they're commodities. So take uranium, for example, or any copper. Even though uranium's dropped 50% over the last 4 years, they're making more money at these all-time low prices over the last 20 years because their currency's been devalued so much more.
Ironically, in 2008, just before the financial crisis, the dollar was getting killed. The U.S. dollar was at an all-time low in the summer of 2008. And then we had a financial crisis, and that actually paradoxically caused everybody to rush into the dollar, and the dollar went on a long bull market as a lot of people began anticipating the normalization of interest rates, the shrinking of the balance sheet, and we built up this speculative bubble in the dollar that fed on itself and did create a lot of problem for emerging market economies that had dollar debt. But when the world realizes that they had this wrong, that there is no normalization of U.S. rates, that there is no shrinking of the balance sheet, that the balance sheet's going to grow forever, that rates are going to stay low forever, and that's when the dollar's going to tank. And then the whole process is going to reverse.
So if rates spike in the U.S. because nobody wants to buy our currency or buy our bonds, what do rates around the world do?
They'll go up too.
And what do those economies do when their rates go up?
Look, they're not going to suffer as much as the U.S., but look, yes, Japan, Europe, everyone's going to have their day of reckoning for having too much debt, right? But I'm talking about on a relative scale, who's got more to reckon with? Who's got more to lose when the dollar is no longer the reserve currency? If gold
But the dollar is
becomes
still
the
the world
main
reserve. The dollar is still the world reserve
yes,
currency.
but when it's not, right, which economy of the world can't exist without imports? You know, people keep saying, oh, America, we don't need trade. We can't buy anything if we can't import it. You know, and we have all this debt. We need savings. The rest of the world is a saver. America is the largest debtor nation in the world. We owe more money than all the other debtor nations combined. But if we are a debtor nation, somebody is loaning us that money.
So what's more,
some countries are creditors.
What's more important, the level of debt or the flow of cash?
Well,
in other words, if a guy has $1 million in debt but makes $100,000 a year, and another guy only has $10,000 in debt but makes $5,000 a year, who's in more trouble?
Well, I would say the person that has the bigger debt, because the income can go away, but the debt's still there. You could lose, you could lose that income. You could lose that job or whatever the source of that income
is.
And
the guy with the smaller amount, he can't lose his job?
No, that's what the argument that people made for me when I was talking about the housing bubble, right? In 2005 and 6 and 7 and about the financial crisis, and I was talking about what was going to happen, people kept saying, oh, you're talking about all the mortgage debt, but you're missing all the home equity. People have all this equity, so the debt is okay. And I said, well, wait a minute. The debt is permanent. The equity is not. That's just a function of the market price of the house. And the house could lose value. And if the house price goes down, the value of the debt stays the same. So, all of a sudden, if things change, I mean, if interest rates really spike up, too, on our debt, we can't afford to service it.
I mean, listen, at the end of the day, I agree with everything Peter is saying regarding the U.S. It's a disaster, and it's going to end really, really bad. I just think Peter has it completely backwards on which domino falls first.
Okay, and on that note, we got a couple of minutes for questions from the audience. The question was, Donald Trump wins, how crazy does he get? Almost as crazy as Peter Schiff? No, I'm just kidding.
Well, I wish he was as crazy as me, but
well, I would say, listen, he's going to get more crazy. I think he just wants to get reelected. Once he gets reelected, he's going to take a hammer to China. He's going to take a hammer to Germany. He's going to take a hammer to France, and it's going to get really ugly.
Do you agree?
No.
Do you agree he wins?
I don't know that he's going to win. I think he has a better chance now than I thought a few years ago because we only have 1 year left to escape recession. So I thought when he was first elected, I thought we would have a recession during his first term. The odds obviously are a lot lower now because we just have to get through 1 year. If we do enter recession before the election, I think he has no chance of winning. If we manage to skirt it, if we don't have a spike in unemployment between now, if the stock market bubble doesn't pop before the next election, he's not a shoo-in. I think he could still lose, but he might win. But there are people who think that maybe he'll finally do the right thing once he's been reelected, right? Because he was trying to get reelected and being more political, but maybe he'll actually cut government spending and maybe he'll actually do some good stuff. And I don't think so. I think he had a small window of opportunity with a Republican Congress to get anything meaningful done, and he did nothing. And if he does manage to get reelected, he'll probably lose the Senate. I don't think if we reelect Trump, we'll probably hand the Senate to the Democrats, so it'll be even harder for anything to get done.
We got time for 2 quick questions, then it's going to be Hall of Fame Golden Glove boxer Rick Rule. Yes, sir, in the back, standing up.
Yeah, well, he's asking about the quantity fear of money, and the quantity went up, so why didn't prices go up? Look, prices did go up. Prices are not lower than they were a year ago. Prices did go up. Why didn't they go up more? Well, first of all, I don't think we're measuring them accurately, so I think they did go up more. But you also have to look at the prices that went up. Stock prices went way up. Last year, S&P earnings were down about 1%, but stock prices were up 30%. There's inflation right there. So inflation is pushing up asset prices, and it is pushing up some consumer prices. And look around the world, there are other countries that had higher increases in consumer prices. So inflation is there. It's just going to get a lot worse. Because it's going to move out of the financial assets when people like it into consumer goods where they don't like it.
See, I believe we're entering a deflation before inflation. And I think me, you, Raul, Grant, I think we're all on the same page. Sir in the hat there. Well, that's what Peter Schiff wanted to promote on his new wallet.
Well, you don't have to create anything to replace the dollar. Gold already exists. It's been here a long time. They tried to replace gold with the dollar, and it didn't work. Remember, they told us that the dollar was as good as gold. Well, it wasn't. Gold is a lot better. And yeah, gold's going to be money again, and you can digitize it if you want, but you don't have to reinvent the wheel. You just have to use it.
I mean, I think the governments are going to issue digital currencies. I think it's a matter of time. I don't know when it happens. I don't know if the gold will be part of it or not, but gold doesn't have to. Gold will go up anyway. I would prefer that gold's not, or actually, I don't think the governments are going to make gold officially money, but that doesn't mean gold's not going to go up.
Gold forces them to be too honest.
Exactly.
Which they cannot.
No government in the world wants a gold standard.
They will resist it as long as they can. But at some point, if there is a general loss of confidence in fiat currency, which always happens, how do you reinstill confidence?
On that, I agree.
What about introduce gold?
What about a twisted world where all drugs are legal, but it's illegal to own gold? We could enter that.
Where it's illegal in every country outlaws gold?
It did in America at one point, right? So
that's just one country for a
but,
while. But it didn't work.
I can see
most people didn't turn in their gold.
You have more gold in the country of Canada in their government right now, and yet marijuana is legal.
Yeah.
So there you go. Yes, sir. So the question is MMT, what does it do to the U.S. dollar?
Yeah, MMT, modern monetary theory, is simply taking QE to its extreme. But there's nothing monetary about it, and it's not even a theory. We've seen it in practice, in Zimbabwe and, in all sorts of countries, Weimar Republic, Germany, you go look down in South America, Argentina, other countries, Venezuela. It doesn't work. It's just printing money. Right? Again, money, all you do is when you create inflation is prices go up. You can't create prosperity. You can't create real wealth by cranking up the printing presses. But for some reason, you have this fringe out there that believes in that. And I do believe that if we do elect the Democrats, they will rely on the central bank to finance most of their spending agenda because they won't be able to raise the taxes from the rich, and that's why we're going to have massive inflation.
Well, I mean, here's what I find interesting about MMT, and I do think MMT's coming. Again, it's not just coming to the U.S., it'll come to Germany and Japan and everywhere else, but MMT is actually going to be a battle between the central banks and the governments. Because MMT is the government just spending the money into existence. You don't even need the central bank. And the central bank is going to want to keep control of monetary policy. And this is Donald Trump just coming out and telling the Treasury to print the money, like literally printing the money. So it's going to be interesting to see how it happens. But again, it's not just going to happen in the U.S. I mean, I'm telling you, we're going to have a currency crisis the likes the world has never seen. And it's going to be because the dollar goes up, not because it goes down. The dollar going down allows the status quo to continue. It allows people to continue borrowing in dollars. It allows the system to continue moving. That's not a crisis.
It depends on how much it goes down. If it goes down enough, Americans can't keep importing. We can't keep buying stuff if we can't afford it.
But okay, we'll see who
There's
wins.
a question right there, young man.
Okay, so repo, this is really interesting too, because just today, China announced $250 billion of new repo. So again, this is not just happening in the United States. It is happening in the United States, but I just saw a chart the other day. I should have put it up here. It shows that international banks have been accessing the Fed repo market to as great an extent as domestic banks. So it's not just a U.S. issue. And the repo rate spiking is an indication for the demand for funding, and that funding takes place in dollars. If nobody wanted dollars, the repo rate would fall. The fact that it spiked to 9% shows the dollars are in such demand, they had to raise the rates to get it.
The fact that the repo rate went up in the U.S. was a reflection that the market wants rates much higher than where the Fed is holding them.
I agree with you.
Right, but the reason the Fed has to hold rates so low is because Americans have so much debt. And one of the problems when the dollar goes down is U.S. interest rates will have to go up because domestic inflation will go up and the premiums will go up. So that's what brings down the U.S. is when rates go up, we can't even afford to service the debt we have, let alone pay it off.
And on that note, Hall of Famer and Golden Glove boxer Rick Rule's going to come up and give his talk.